All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Monday, May 20th. So another ugly day for the indices, as well as looking under the hood. Some sectors really got hammered pretty hard today. So we're going to go over all those. I'm going to actually go through all the sectors today, all the what's known as the GICS sectors in the S&P, just to kind of let you decide, what you think is going on here in terms of the overall market. As always, I start with the major indices, and then we'll drill into sectors, and then we'll go into some single name stocks. But here's where we are in the daily chart. Let me back up and talk a little bit about the weekly chart first. Weekly chart, the level. This is something that we talked about in the weekend newsletter. 2817. That was the level that we bounced off of last week, and we could be retesting it very shortly. We're about about 27 handles away, it looks like, somewhere around there, that we're going to be testing that 2817. I just have a feeling that that's going to happen this week. But who knows? Who knows what it, I mean, we are certainly seeing some big moves day to day. I'm also going to talk a little bit about the pattern. So if we switch over from the weekly chart to the daily chart, here it's kind of revealing from last week, towards the end of last week, where we got into. This was on Thursday. We did not maintain price was not able to hold and close inside value, right? That's a big thing if you're looking at value areas, and always the value areas give great support and resistance levels, but we could not get inside, call it 2879. That was what we were looking for a close inside. It looks like we barely got that on Thursday, but reversed on Friday and moved back on today, obviously, where we finished down. S&P futures finished down 60 basis points. But overall, you would look at that and you'd be like, it's not that bad, down 60 basis points. Wait till we get underneath the hood. Next, small caps. There's not much to really look at the small caps in terms of the weekly chart. It's such a large weekly value area that, this would be a big move down, this would be a big move up. So I think you have to look at. I forgot Qs. That's okay. We'll come back around to Qs. But let me go to the daily in IWM. I thought, kind of what we've been seeing. I'll just talk a little bit about some observations as we're going along. But, IWM basically tried to rally today. It almost went back to unched for the day, after starting the day lower. And what we're seeing, I think, the last few days, and kind of a spillover from last week, besides a couple days where we rallied pretty nice, we're just seeing that the buyers or the bulls, they can't push through. They're just kind of running out of steam. I mean, it could also be, more often than not, is a little bit of short covering that's bringing us back up, right? The shorts are covering a little bit. They're taking some profits and then looking to possibly reload. I think that is what's going on a little bit more than actual buying by long onlys right now. I think that the long only crowd right now, there's too much uncertainty. There's too many things that are falling too quickly. So I think what we're seeing is more shorts just kind of come in and push this market around, and then when they want to take profits, we're seeing a little bit of a move up. So here's IWM. You can see this is now broken, right? I mean, this was also, to a bigger extent, right, back last week, try to get inside value, could not do it, and has been failing since. This was again on Thursday. And a little bit of a sign on Thursday too was it just, we moved up less on IWM, and again, we want to see this leading, right? For me, I look at about 4 or 5 different things that tell me that we're kind of moving in the right direction, kind of an under the hood type of look, and small caps is one of those. I like to see emerging markets move and kind of lead the market higher. The semiconductors, which we're going to get into, we're going to get into these things, but right now they're all leading the market down. So it's really tough for me so here's the Qs, also same thing. Qs were a little bit stronger, but are going down quicker, right? This was down 1.7% today. And then if you look at the weekly, we're still holding support and we still have we could still go down a few more handles here. 176.19. So we've got less bumper room in S&P and a little bit, even though we were down more in Qs, the Qs have been stronger, over the last few months, and therefore they've got a little bit further to go to hit support. So that remains to be seen. I think those are great levels. I'll just repeat those levels for you. 176.19 in the Qs. That's the level by the end of the week. You're going to hear me talk about that level a lot. We are having a webinar tomorrow night. I call it chart forum, where we're going to be going over all of these in more detail, as well as the single stocks and so forth. But S&P futures, just to give you that level again, which is, again, I know this level already, 28.1775. So again, those are going to be the two key levels that I'm watching in the S&P and the Qs. If we switch over to, so let's talk first emerging markets. They're getting, absolutely smoked. Only down 42 basis points. They are testing a major support level. That's 39.63. But if you start to look at, and I think the first area that I'll look at is kind of the Chinese internet group, right? So if we look at this group, Thinkorswim is really slow at this point on my computer anyway. So, this is losing support. So down 4.3%. So this is where, again, I'm saying, I think it makes sense to look under the hood. We do have a virgin point of control that we're coming up to. We have not taken that out yet. We are getting pretty oversold here, but if you look at this slide back, what we saw, towards the end of last year, and where we really started to kind of pick up steam to the downside, we were just taking out levels. We were getting oversold and then bouncing, getting oversold, small bounce, and so on and so forth. So it does look like this is getting dangerously low to where we were towards the end of last year. And again, does not give me a great feeling of the overall market, Chinese internets. And further, if you look at the semiconductors, these were battling back and forth today to see the two worst groups, but the semiconductors falling, down 4%, really, really ugly. This is the second. I think this is now down, month to date, is down over 13%. The semiconductors. So these are falling apart, and I think you kind of know that from seeing something down 4%. Just looking, I did put together just so you could look at. This is not even month to date, but this is 1 month change. Oil servicer, which I have to check that number, but it says down 16% over the last month. Then you've got Chinese internets, and you've got semiconductors down well over 14% in 1 month. Metals and mining down 10%, steel names down 9%, energy and gas also down 8%. I mean, this is this is not good. So, and then only the few sectors that are outperforming, are your defensives. XLV, healthcare up 3%, utilities up 2.7%. Really not good market breadth over the last month. A couple sectors in there in the middle. You've got internet. Where's technology on this list? Why don't I have, where's XLK? Here it is, down 4.8% for over the month. So, this tells me that this could be more. So again, I think you have to watch those two levels that I mentioned in the one in the Qs, the one in S&P. But the more and more that I see this kind of stuff, this is not a normal. This to me is not feeling like a normal pullback anymore. With seeing semiconductors down 14% in a month. So if something is going to happen, a lot of this is what it is. It's the trade war. It's headline driven, but this is really affecting things. And when I'm not going to get political here, but when you really start to upset the apple cart, you're taking something that had momentum and you're just running it into the door or to a wall, which is what's going on right now. So let's go. So we went over Chinese internets, we went over the semiconductors. Let's start to go through, and just so that you can kind of see what's going on, and we'll talk about what's underneath the 50-day moving average as well as what's under value. So you've got XLK, both, right? The purple line on my chart is 50-day moving average. This is the value area, so the price is underneath the value area. Let's go both the consumer names. So consumer discretionary, that is also underneath the 50-day moving average, or below the 50-day moving average, below value as well. XLP, it's going to have a different look to it. Strong, right? Not doing anything great to the upside. Even though this is a nice trend, I've been looking at some of the consumer staples. This is not a group that I really want to chase to the highs at this point. We'll stick with the defensives, and we'll go to XLU next. XLU was up 14 basis points, kind of a toppy looking candle for the day. We'll also look at IYR, which is REITs. REITs actually came in today down 1.5%. Actually got hit pretty hard today, down 1.5% today. Another group to look at is the communication. This is the new communications group or sector, which I'll just wait for Thinkorswim to adjust here. And you could see, so we're just going down the list here. So the communication sector, remember this was brought out. This was stripped away from technology and from consumer discretionary. This is actually in value. Remember, you get some telecom in here. You also have things like Netflix that's in here now. So that is inside value, and it just barely closed underneath the 50-day moving average today. So a little bit better. You could see the volume here. There were some outflows in this ETF last week. What else? So we covered the consumer names. We covered technology. Let's look at industrials, financials, and materials. Industrials kind of looks like the S&P as well, or some of the other sectors. That is way below the 50-day moving average, below value, above the 200-day moving average. Let's look at materials. They have been in a very weak group. They are below the 200-day moving average, below the 50-day moving average, way below value. So you can see very weak group there. XME, which has a lot of steel names in it. This is also one of the weakest groups right now, almost back to the December lows. So not only way underneath the 50-day moving average, 200-day moving average, way underneath value. Financials have been actually holding up fairly well. They've actually finished green in the day. So it's, maybe some of these groups are feeling like a rush into, I don't know, safety, or maybe because of the dividend yield, but they have not broken the 50-day moving average. They have also not broken the bottom of value. Very interesting that financials are holding up fairly well, because sometimes you would see that much lower at this point. What else? Utilities, healthcare, and so last we'll do XLE, and then we'll look at. So again, below the 50-day moving average, basically below all the short-term moving averages, below value. You've got a virgin point of control down there. XLV healthcare, which we did see some names that were doing pretty well today. This was flat on the day. I still don't like this chart. It is inside value, but it's below. I think names like UNH today, this was the top pick that we had in the weekend newsletter, so doing very well, and it did close above value. So what I like about this chart is it has now broken this downtrend, and I like the weekly chart even better, because you've got a nice level. You actually have a couple levels to trade against, but you could see that little downtrend is broken, and it's been moving up here. So for now, I think this group is not even close to 52-week highs. We saw a big call buyer come in Centene today. I did take that trade. 5608 is where we need to close inside for the week, right? Weekly value area. But this name did not do much. It's interesting that, not even the whole managed care space is moving up. There is some separation. This looks fine on the daily chart. It is obviously a counter trend trade. It's above the 50-day moving average, above value, but below the 200-day moving average. I also wanted to talk a little bit. So that's basically, there's obviously some other sectors that we could look at too. That's a little bit smaller groups, but inside technology, we looked at the semis, we looked at XLK, IGV, which also looks a tad weak as well. This is what happens sometimes just when there's a little bit more volatility. It's tough to hide even in the software names, which have been strong. So that just broke the 50-day moving average, just very representative of risk off, right? That not even that group is holding up on a day like this, down 1.7%. So I got a couple questions or a couple observations. Like, why isn't the VIX up higher, right? The VIX only finished up 2%, and then we'll also look at bonds as well. I agree. I think it should be a little bit higher, considering that so many things are breaking down. But remember what the VIX, a lot of people, when they don't understand it, they say, oh, the VIX is broken. It's not broken. It's still doing exactly what it should be doing. It's measuring short-term volatility in the S&P, right? And so it looks at 30-day options out and looks at the implied volatility. There's nothing broken with that. I think the issue is, just as we went through some of the sectors, the S&P was only down 65 basis points. That's not a down a 2% day. So again, S&P is much different than looking at some of those sectors that we looked at. And again, banks were up on the day. I'm looking at KRE as well, KBE. Those were both up on the day. Utilities up on the day. So you had a handful of sectors, and the banks are a decent portion of the S&P. So I think that's what's going on here. What you want to look at, if you're wondering where the volatility is, you have to go to VXN, which is the VIX for the Qs, right? For the VIX for NASDAQ. That's going to look a little bit different. This was up over 11% today, right? Because the volatility is showed a pickup in the Qs, not S&P necessarily. Because again, Qs were down 1.7%. The S&P was only down 65 basis points. So I think that's something to focus, again, you have to know your volatility instrument. The VIX for IWM, not that big of a jump either, only about 2%. So where does this kind of leave us after our 17 minutes of analysis and looking at some names and some groups? I think personally, again, video is not for recommendations or advice, but I don't like some of those things falling 4%. This very well could be another buy the dip opportunity, but I have to see something then other than utilities and managed care outperforming. That's great if you want to hide in some of these names, and have a position. I think there's nothing wrong with having a position in UNH or Centene. And maybe a utility, but I'm personally not putting all my portfolio. I would rather have it in cash rather than all in utilities and consumer staples. I just don't think that that's going to be the place for me to be long term. For short term, a couple trades here and there, that's fine. But overall, I think you just have to let this, as I was saying at the end of last week, just have to try to let this play out. And I know if you're an active trader, seeing things, to me, besides looking at the semiconductors break down and several other groups break down, I don't like the price action that we're coming in. The market is weak. We try to bounce and we can't bounce. That to me shows that this is not completely over with. Now, that said, considering this market is moving a lot on, it's pricing in damage with tariffs and damage with retaliation with China. If some type of nice, headline comes out, that by chance could definitely, at this point could definitely help the market. But I see a lot of deterioration going on, so I would rather be cautious. I'm not getting full on bearish, and I don't want to get 100% negative because we know that sentiment is getting pretty washed out. But Just I talked about. I'm gonna get his name wrong, but Chris. Here, I think I have this up, but from earlier, from our weekend newsletter, and this was his work, and I just want to give him credit. But this was a great video that he put out this weekend, and you could go ahead and review it. I don't think it's even an hour long, but he was talking about this just scenarios based on historic situations when we've been in this kind of the same boat. And I think what the conclusion was is that the majority of times, not 100%, but a very good percentage probability that we're going to be higher, like in a year to 2 years. Again, that's a good percentage. It's not 100%, but in the short term, I think the better than average consensus was that we go down a little bit further. So that's kind of the boat that I am in. And I'll kind of remain that way, thinking to err on the conservative side until we start to see some things like the small caps. I changed my mind like that. If the small caps would have closed like up a 0.5%, I would have said, hey, that's a really good sign. If something else, like we would have rallied hard off the off the lows, then I would have said, hey, that's a good sign for the market. But we're just not there yet. So I think, again, if you're a trader like me who's in the room every day, and you're reading flow and so forth, I think the best thing to do right now is just to trade very lightly. And I did add a couple trades into today's weakness, some things that I wanted to buy on the dip. But certainly I have to tell myself, and just like we talked about in the weekend newsletter, scaling in is very appropriate now. So sometimes realizing that my first entry won't always be correct. So therefore, you've got to really dial down position size. So these are the things that I think to kind of come to terms with. I think also the people are also quoting a lot of the put call ratio. That has now been elevated for about 10 days. So, usually for shorter term dips, what we see is the put call ratio get elevated for 3 or 4 days. It's now up for about 10 days. So that feels like more of a structural pullback. So again, I'll just kind of finish the video here with just being patient and letting this work through, and not sticking your head out while the riskier sectors are moving down faster than anything else. All right, guys, that's it for today's video. Have a great night. Tomorrow, we will go through all of members' watch list. Man, we found some great trades, by going through different charts and looking at daily and weekly levels. We actually found MDB last week, so we really found some nice setups, and I look forward to doing that tomorrow. That's tomorrow after the close. Again, you have to be a member, and I think really after the move today, I think tomorrow after the close may be a really good time to actually sit through, and hopefully at that point more of the damage may be, we may be more through the damage than we are right now. All right, guys, that's it. Thanks for watching. Have a great night. See you tomorrow.